Everyone keeps asking the same question. Why are prices still high? Why does everything, from groceries to rent, feel impossible? The answer is unsettling. America doesn't just tolerate inflation, America needs it. And that's why prices are never going back down. Welcome to Wheelixon, where every story reveals how money, power, and history shape the world we live in. Here, we uncover the patterns behind inflation, crashes, empires, and the lessons they left behind. Chapter 1. The illusion of high prices coming down. Every American feels it. The grocery bill that used to be $60 is now. Chapter 2. Inflation is not an accident. It's official policy. Most people think inflation is some unfortunate side effect of bad policy, global conflict, or supply shortages. But the Federal Reserve has a very clear goal. 2% inflation every single year. That means your money loses value every year. Your savings buy less every year. Your paycheck gets silently drained, and the cost of living always rises. This isn't tea mismanagement. It's the blueprint. Ask the Fed why they want 2% inflation, and the answer is always the same: to keep the economy growing. But what does that actually mean? Why does the economy need rising prices to grow? Why can't we have stable prices or falling prices? Because America built a system that collapses without inflation. A system powered not by productivity, but by debt. Chapter 3. The debt-based engine behind the U.S. economy. Here's the uncomfortable truth. America functions on ever-growing debt. Government debt, corporate debt, household debt, consumer debt. Debt isn't a flaw, it's the fuel. And inflation is the oxygen that keeps that fuel burning. Let's start with the biggest one. 1. The U.S. government needs inflation to pay its bills. The United States owes more than $35 trillion. It cannot pay that back. It can barely afford the interest. Inflation reduces the real value of that debt over time. It melts debt quietly. $1 trillion borrowed 10 years ago isn't worth the same today. Every year inflation rises, the government's past debt becomes cheaper in real terms. This is why governments love inflation and fear deflation. Inflation, Verkaufter debt becomes easier to manage. Deflation, Verkaufter debt becomes heavier, more painful, more dangerous. 2. Corporations need inflation to keep profits. Growing Wall Street doesn't reward stability. It rewards growth. Share prices rise because revenues rise. Prices rise. Profit margins expand. Without inflation, companies cannot raise prices. If companies can't raise prices, their revenues flatten. If revenues flatten, stock prices fall. If stock prices fall, retirement accounts, pensions, and investments collapse. The entire corporate world depends on prices rising. Inflation isn't bad for business. Inflation is how business survives. 3. Banks need inflation for more lending. Inflation makes borrowing seem normal. It encourages people to take loans because waiting becomes expensive. Buy now before prices rise. Lock in your mortgage now. Inflation will make your loan cheaper over time. Banks profit from constant borrowing. Inflation makes that cycle never ending. 4. Consumers become dependent on credit. When wages done to keep up with prices, and they never do, people rely on credit cards, auto loans, personal loans, and refinancing. Inflation pushes Americans into the lending system, and lending is where the real profit exists. Inflation isn't a side effect. Inflation is the engine. Chapter 4. Why deflation would collapse America? What if prices actually came down? Wouldn't that help Americans? Yes, and that's exactly why the system cannot allow it. Because falling prices, deflation, creates a chain reaction that destroys the very structure of the U.S. economy. Here's why. 1. People stop spending. If prices fall, people wait. If people wait, demand dies. If demand dies, the economy freezes. 2. Corporate revenues collapse. Companies can't cut prices and keep profits growing. Stocks crash. 3. Wages fall. If prices fall, companies cut salaries to match. Workers lose purchasing power. 4. Debt becomes heavier. Think about it. If your income falls, but your debt stays the same, your debt effectively becomes larger. Deflation is a nightmare for a debt-based system. 5. Bankruptcy spreads. With falling prices and falling wages, borrowers default. Lenders fail, markets panic, banks collapse. This is what happened during the Great Depression. Deflation didn't just weaken the system. Deflation nearly destroyed it. After that, America made a silent promise. Never again will prices be allowed to fall. And the Federal Reserve became the guardian of that rule. Chapter 5. Why prices stick and never go back. Down even when inflation cools, prices remain stuck at their new higher levels. This phenomenon is called sticky inflation. Once a company raises prices, they almost never lower them. Why? One, because their costs don't fall. Labor costs go up and almost never come back down. Rent goes up, utilities go up, insurance goes up. Companies can't reverse these. Two, because shareholders expect rising profits. If profits fall, stock prices fall. Companies don't risk that. Three, because consumers expect rising prices. People have been conditioned to believe everything gets more expensive. That belief becomes reality. Four, because inflation compounds. A 5% increase followed by a 3% in increases still gives you a higher base price. Chapter 6. The middle class. Is the collateral damage inflation helps? The government, big corporations, Wall Street banks, but who pays for it? You, the American family, the everyday worker, the saver, the retiree, the young adult trying to start life. Inflation transfers wealth from workers to corporations, savers, to borrowers, renters, to landlords, consumers, to producers, households, to the government. This is why the middle class shrinks, savings collapse, debt rises, real wages stagnate, financial stress grows. Inflation is a quiet tax, a tax without legislation, a tax without debate, a tax that burns the poor and preserves the rich. Chapter 7. Why prices will never go back down again. Here is the final unavoidable truth. Prices cannot fall because the system collapses if they fall. Not politically, not economically, not socially. America needs inflation because debt must shrink in real value. Corporate profits must rise. The stock market must grow. Banks must lend. People must spend. The government must borrow without breaking. Inflation is the price the public pays for keeping the system alive. And until the system changes, prices won't. Chapter 8. The psychological trap of inflation. Inflation does more than raise prices. It shapes behavior. It teaches you to spend fast, avoid, saving, rely on credit, chase wages, accept rising costs, work constantly, struggle quietly. Inflation isn't just economic, it's psychological. It creates a society where the average person never feels safe, never feels ahead, never feels free. And that too is part of the design, because dependent citizens are predictable citizens. And predictable citizens keep the machine running. Chapter 9. So what can change this? Realistically, only two things. One, a new monetary system, the current one is built on debt and inflation. Changing that would require rewriting the financial architecture of the United States. Two, a deflationary collapse. This would bring prices down, but it would come with mass unemployment, market crashes, bank failures, and economic chaos. No politician wants that. No central bank wants that. No corporation wants that. So the system continues. Inflation continues. Pressure on households continues. The machine survives, but the people pay the cost. If this video finally explained why your cost of living keeps rising even when headlines claim the economy is strong, then you understand something most Americans never will. At Wheelixon, we uncover the hidden systems shaping your money, your future, and your financial reality, so you can navigate the world with clarity, not confusion. Subscribe to stay informed, stay aware, and stay ahead of a system designed to make you dependent. See you in the next video. Bye.